look at Meta. The reason why I got Meta on here is not necessarily because I'm long it or anything. I don't have any trades on in it. This is just a warning to be a little careful. This is what we call an ascending wedge. You know, you see it just it's going up, but it's almost like it's just slowly just trickling up, right? And you figure at some point it's gonna break out of this wedge. Now it could be to the upside. It could break out of this wedge and go to the upside. But what I do want to show you is I'm gonna come all the way out to the monthly. Now, I very rarely look at a monthly chart. Almost never do I look at monthly charts. But I want to show you guys something. This is another little trick. So you got one green day, or excuse me, green month. Each candle represents a month. One green month, two green months, 3, 4, 5, 6, 7, 8. Now you got 8 green candles, right? 1, 2, 3, 4, 5, 6, 7, 8. And now we in the middle of almost a ninth candle. Right around 6 candles, I start generally looking for a pullback. I start looking for pullbacks on 6 candles. Six candlesticks. It doesn't matter whatever the time frame is. I see 6 candlesticks in a row. I start looking for turns. And that's just a free nugget. We had 8. Excuse me. This was 8. We had 9 on a monthly chart. So that doesn't mean anything, right? It can continue to do what it's doing, right? I'm just saying, be careful. If you own it, it ain't a bad time to sell some calls against it. It got a 33 IV rank when it earnings. Now it does have earnings on July 26th. So, like I said, I would just be careful. Now earnings could make it explode higher. It's just that once I start seeing candlesticks, once I start seeing like 6 candlesticks in a row in any direction, it could be 6 up, it could be 6 straight down. I start looking at pullbacks. I automatically do. You don't even see 6, and during this up move right here, you don't even see 6 straight green candles. Right here, you got 4. 1, 2, 3, 4. Look, 1, 2, 3, 4, 5, 6, then pull back. Just look at it. Just start looking at. Look, 1, 2, 3, 4. You got a red candle. Look right here, green gap up. I count this as a green because it still was up. So 2, 3, 4, pull back. You got 5, 6, pull back. Look at it. 1, 2, 3. We'll count that because it went up. 4. I'm gonna count this one. Say 5, because it's like a harami. 6, and we'll say 7 on this high. Then look, chop. See what I'm saying? So once I start looking for that, those are like little triggers where you be like, all right, I done had 6 green, I done had 6 up days in a row. Once you start getting the 7, the 8, you start getting at extremes. And so once I get to that, start seeing that on any time frame, I don't care what time frame I'm trading, whether I'm scalping and I get 6 straight like minute candles up, like I start looking at taking profit, or I reassess, right, how I'm gonna trade it. And if you look at the monthly, it's just been doing that. And we got this wedge. So now this wedge is a wide wedge. So right now we're at 290. The way I drew it, it's right around the bottom would be like right around what, 260. Let's call it 260. What's the expected move for the monthly of August? We're gonna go out 41 days. Look at that month. You see that? The expected move is $33. So the range from now to August is $33. Where would that put you? Right down here at the bottom of this wedge, which would be 257. Now, if you're long Meta, can you take that kind of move? Right? Are you willing to give up $33 a share? So you got to start looking at that. That's how I use, even if you don't trade options, it's good to understand the option chain, because that option chain, right, will start letting you know once, and this would be a normal deviation. So 33, that's normal. Like that would be a normal range. So if this happened, it wouldn't even be a big deal if it went from 290 to 260. That would be well within the expected move. So that at least should be your risk. And if you can't handle that, then you got to start looking at other options, right? No pun intended. So you own the shares. Maybe you sell calls against your loan position. Maybe you buy some put spreads or buy put, whatever you're comfortable in doing. I just wanted to show you guys this wedge so that if you're in it, you can plan accordingly, right?